Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Fresh Agenda, Everegg's Global Insights team. And Steve, we're back this week with a bit of a roundup of the interesting things in the market, a pretty positive pulse results for prices, a bit of a roundup on global trade, and of course, chat of the week.
Let's get into it. A bit of coverage here. We're going to mostly talk about fats when we talk about market changes. Here's this is where spot prices got. We're getting to extreme levels in Europe, and next week's data would show we've gone way past these. These are spot price quotes at the end of last week. Really quite, the acute supply constraint on cream, which has got many things adding into that. When you look where futures have gone to, Joe, that's also picked up.
Butter futures have really raced ahead above €8,000 a tonne. Q4 24 trades are at that level. So there seems to be a belief that this tightness is going to linger well into the early part of 2025, Steve, on that basis.
We've covered in a couple of videos ago all the factors leading to this and what might undo this. But, here's the seasonality that we looked at. At the end of July, we put this in the video as how butter was tracking in this current year compared to prior years, and that looked reasonable. This is where it's got to this week. And mind you, official numbers are yet to catch up with this. So look, the precedent is clearly there for cream to stay up through into December. That's a 6-year history there with cream over that period.
You can see when you look at cream, Steve, it's an even more extreme picture as that index is really rising up into the stratosphere there, really unprecedented levels. But based on the patterns, we'd expect it to kind of plateau at this height.
Yeah, unless something undoes, but it's hard to see what that would be.
Yeah, and then again, we've been looking at this for some time, Steve. The advantage that New Zealand has, or the gap between the New Zealand futures and GDT curve compared to the AEX futures. So that's just widening. And in this case that we've got on this chart, Steve, I think there's 30% of most favoured nation tariff and freight included in that, and there's still a massive gap there in terms of the competitiveness of New Zealand product. We did wonder, is the UK going to get the product rather than the continent, Steve? You didn't find much trade happening so far based on the July data.
A few hundred tonnes of both butter and AMF into the UK market so far, so that may be early days. I mean, product is not abundant in New Zealand yet, so it could be that's coming. But again, which market gets preference? UK is tariff free in the new world, so that may well be the case.
Mm-hmm.
I've done a bit of digging too, Joe, in how these prices are being passed to consumers, and my extensive survey of retail prices in private label online offers in the past week. Earlier this week, I took this survey, showing the retailer and the country in each case. Clearly, Aldi is, in the more price-sensitive markets, Ireland and Germany at the top there. These are per kilo prices, so just consider that the wholesale price into retail is already at that level, the 7,400 or €7.40. A bit more of an increase to get flowed through, but they are pushing through higher prices in Netherlands, obviously at the bottom there. That's a more premium retailer, but pretty different attitude across the board. Just with the variation in price sensitivity in each of those markets and in each of those retailers.
Yeah, it should be a survey we do from time to time, Steve, and just watch those pass-throughs happen, perhaps, and what that does to demand is obviously the critical point there.
So a pretty good pulse result again, Joe.
Yeah, continued increases in prices. So for whole milk powder, this pulse event, prices finished 1.7% up on the GDT that was held last week, but they are 9.2% up on the previous pulse event, continuing that rise, Steve, in terms of whole milk powder. And also skim milk powder was up 2.7%, and that was 4.7% up on the prior pulse event, so a little bit more of a steady increase in those events over the last few weeks, Steve.
The higher prices for ingredients have been passed on to New Zealand dairy farmers. Fonterra announcing last week that it's lifted its price forecast range. The midpoint of the range was showing there in the orange dotted line. It's now moved up to $8.50 per kilo milk solids in New Zealand. That is below where the futures are for the 25 years, showing in there in the black line. So futures are still expecting higher value. It's interesting to note what's happened here. Fonterra has actually lifted their price to meet the forecast we previously had, having for some months, of that same number. So they've fallen into line with our expectations. But interesting, these recent events will push that a bit higher, the expectation a bit higher when we add that up.
Part of the release of this updated milk price announcement was the advance rate would be pushed higher earlier in the year. So from September on, when Kiwi farmers are getting the August payment in September, that advance rate is more than 20% higher than they would have been receiving in the prior season. So it's a bit of a boost to cash flow, Steve, and it's probably going to bolster a bit of confidence in New Zealand for Fonterra suppliers.
Yeah, given there's no real march in feed costs and a pretty good start to the season through the calving period and a reduction in interest rates for New Zealand as well. So there'd be a bit more enthusiasm for producers.
Mm-hmm.
Just a quick look at global trade, which we've added up for June across the board.
Yeah, and the story here is on a milk solids equivalent basis, global dairy trade was down 7.5% in June. So that's 4 months of decline that we're seeing there.
Mm-hmm.
And it's probably not surprising given that there have been these constraints on supply. We're 1.3% up on the low point there that we got to in March 2023 and down almost 4%, 3.9% from that peak on a rolling 12-month basis that we reached in September 21. So, not massive shifts there really, Steve, in terms of what's happened in overall trade, but some interesting trends within the products.
Yeah, looking here at the growth in the contraction in most commodities, we see really cheese is the only major category that grew, and it barely grew in the last month in June. A bit stronger growth in some of the smaller commodities. Dry whey is picking up, and this is a bit to do with China as well, and improving demand there. And infant formula is also coming back in that market, but heavy reductions in AMF, pretty solid reductions also in skim and butter. That's with lower availability, of course. And when we look at butterfat trade, Joe,
yeah, look, it's mostly down there, isn't it, Steve? The last 12 months is the darker line there. And you can see in the EU, trade into the EU is well down. So a bit of UK-EU trade that's not occurring anymore. The only area where it's up over the last 12 months is in the Middle East. So, a lack of availability, higher prices, it's really putting the crunch on butterfat trade over the last 12 months or so.
I've looked also, Joe, at New Zealand's trade. That came out last week as well. The July trade came out around the same time. We got the complete global picture for June. Interesting look here, this rising butterfat value, particularly AMF. Trade has, slumped year on year, but that's a little distorting. When you look at the low points we saw this time last year, the high points we saw this time last year, they were quite up there. But really the monthly totals, I think, are interesting here, that we're sort of batting around the same level that we have been for about 10 months with those prices moving in that period. That's when prices started to hike. We're 25% down year on year in July, 80% down in the 6 months to July. But, China and MENA are hanging in there in terms of volumes, and they caused that jump in the monthly tonnage in July. So watch this space. We're not seeing the extent of the price sensitivity we might have expected.
Sure.
When we look across the skim milk powder, New Zealand skim is also staying well up year on year. We've had some big tonnages into China and Southeast Asia in terms of year on year over some very small numbers the prior year, so that's also encouraging. But when you look annually, Joe, this is quite an interesting picture, I think. Yeah,
that really puts that New Zealand trade into context, Steve, and the big shift in milk towards skim as New Zealand tries to limit its exposure to whole milk powder. So about 100,000 tonnes, you said, was the higher trade on an annualised basis. And New Zealand are probably likely to continue to win share, particularly in Southeast Asia, where there's a bit of a recovery going on, and obviously New Zealand has a bit of an advantage in terms of proximity. Even China's showing some signs of recovery. So it looks like that shift in product mix, Steve, will probably remain for New Zealand.
Jo, chart of the week, what can you bring us home with?
Just thought we'd go across to Europe, Steve. And in Europe, the production headwinds have been in place for some time, and we've been talking about it for some time. We're not really seeing a lot of traction in terms of milk production. At the moment, there is a increasing or escalating issue with blue tongue, which was much more focused in the Netherlands, perhaps 6 to 12 months ago. Now we're seeing it spreading into other member states within the EU, into Germany, France, as well as the Netherlands. Feed quality is also a little bit of a concern. It's been very hot in parts of Europe, and so some of those crop estimates are starting to be a little bit wound back. But on the positive, milk prices are certainly increasing in most of these regions. Feed costs are pretty steady, not sure about the quality, and perhaps the hot weather will be easing in the next couple of weeks. So I'm sure those weekly numbers will continue to bounce around, Steve.
Yeah, okay, that's a good wrap. Look, thanks for watching. That's all we have this week. We'll be back again next week.